Welcome back, my dear friends, to this interesting session of MCQs, wherein today we shall be discussing MCQs on SA705 in particular. Yes, we shall be discussing more of MCQs on SA705. Yes, SA705 forms a very important part while preparing or while reporting in case of modifications that arise in the financial statements. Okay, yes, come on, without wasting time, let's quickly begin and let's understand how this particular standard needs to be applied and how these MCQs need to be solved in the examination. SA705 deals with, yes, my dear friends. Now, if you look at the first question on the screen, SA705 deals with forming an opinion, modifications to the opinion, emphasis of matter paragraph, key audit matter paragraphs. When we began the video itself, the first thing that we discussed is SA705 speaks about what? Modifications to the opinion on the financial statements. So here the correct answer would be B, my dear friends. Okay, is the correct alternative we would choose is alternative B. Next question. Which of the following is not a type of modified opinion as mentioned in SA705? SA705 speaks of three types of modifications. One is qualified, adverse, and disclaimer. Okay, so here they are speaking about not a type. They are speaking about what, my dear friends? Not a type. So something other than qualified, adverse, disclaimer. So here I think the option C speaks about clear opinion, and clear opinion is definitely not a modified opinion. So here the correct answer, my dear friends, would be C, clear opinion. Okay, yes, come on, let's quickly go ahead to the next question. Question 661 on the screen. The decision regarding which type of modified report is to be issued depends upon. So what is the decision on the basis of which we need to give the modified report? Modified report, okay? Yes, we need to see the materiality and pervasive effect on the financial statements regarding two situations. Which are the two situations? Number one, material misstatements, and number two, my dear friends, yes, number two, inability to obtain sufficient and appropriate audit evidence. Okay, yes, now if we see the alternative A, it says that the nature of the matter giving rise to modification, that is where financial statements are materially misstated, or in the case of inability to obtain audit evidence. Okay, no problem. So option A seems to be appropriate. Option B, auditor's judgment about the pervasiveness of the effects or possible effects. Correct? Yes, when we speak of the effects, then effects come when the financial statements are materially misstated. Possible effects when there's a limitation on scope or inability to obtain sufficient and appropriate audit evidence. So here B also holds ground. So here the option C is both of the above, option D is none of the above. So the most apt answer here would be C. Okay, no problem. Let's quickly go ahead further. The next question. If the financial statements are materially misstated. So here, what is the situation? There is a material misstatement. Okay. Now this material misstatement, my dear friends, yes, and the effect is material but not pervasive. So the effect is what? Yes. Is it material? Yes, it is material. Now, is it pervasive, my dear friends? It is not. I'm sorry. Is it pervasive, my dear friends? No, it is not pervasive. So material misstatement, which is material but not pervasive, in this case, we need to issue what? We need to issue the qualified opinion. Okay, so the most apt answer here would be, correct answer here would be qualified opinion. If we go to the next question, if the financial statements are materially misstated, okay, so here also the situation speaks about what? Material misstatement. Okay, no problem. Now, whenever there is material misstatement, we need to understand the effect. Okay, the effect may be either material. Just a minute. The effect may be either material or pervasive. Okay, yes, just a minute. Yes. Now, we need to check the effect. Effect may be material. Effect may be pervasive. Okay, no problem. What has been told to us here? Yes, just a minute. OneNote has just hung up itself. Okay. Pervasive. Okay, what does the question say? The question says that the effect is material as well as pervasive. Material misstatement, material and pervasive. So that is a perfect combination of adverse or disclaimer. Come on, tell me. Yes, it is a adverse opinion would be issued in this particular circumstance. Okay, let's go to the next question. An auditor of X Limited was unable to obtain sufficient appropriate audit evidence. So here there is inability to obtain audit evidence. Whether the financial statement may be materially misstated or the effect of the financial statements is material but not pervasive. So here they are speaking about what? Inability to obtain sufficient appropriate audit evidence. It is material, not pervasive, right? Okay, so this is a perfect combination for issuing which kind of opinion? Qualified opinion. If in number 6 the effect would have been material as well as pervasive. See my dear friends, here there is inability to obtain sufficient and appropriate audit evidence. That means there is limitation on scope. And if there is limitation on scope, what opinion would be issued? It would definitely be disclaimer of opinion. Let's go ahead further. When we speak of pervasive effects on financial statements, they are not confined to specific elements, accounts or items of the financial statements. Means they do not speak of just one item. Okay, they give a broad effect. Number 2, if they are confined at all, represent a substantial portion, means a huge portion of the financial statement. Option C, in relation to disclosure, are fundamental to users' understanding, means they are material as well. Okay, so pervasive means what? Absolutely yes, something which has a huge effect or affects the financial statements entirely. So all the three options speak about pervasive effects. So here I would choose the alternative D as the correct answer. Let's go ahead further to the next question. Qualified opinion is issued when the auditor concludes that misstatements are. Qualified opinion, when is it issued? When the material misstatements are what? Are material. Material misstatement, it is material but not pervasive. Material, not pervasive. Material, not pervasive. So here if we see material but not pervasive, option C is the correct answer. Okay, let's go ahead further to the next question. Adverse opinion. Come on, tell me, when is adverse opinion issued? Adverse opinion is issued when the effects are material and pervasive. Material and pervasive. So option A is the correct answer. Now tell me, when is disclaimer opinion issued? Yes, auditor concludes that the material misstatements are both material pervasive, material but not pervasive, unable to obtain audit evidence. Yes, disclaimer of opinion is given when we do not have anything to report upon only. Yes, so auditor is unable to obtain audit evidence. Okay, now next question is really very interesting. While doing the audit of A Limited, a listed company, we are speaking about listed company, it was identified that the depreciation on fixed assets has been undercharged. That is, less of depreciation is charged. That means fixed assets are shown as a higher amount. By how much? By rupees 50,000. Now come on, tell me, ideally for a listed company, okay, a material misstatement of 50,000. Yes, would it affect the financial statements as a whole to a large extent? No. That means it is material but not pervasive. So the ideal answer here in this particular case would be issuing qualified opinion, my dear friends. Yes, so issuing qualified opinion would be the best answer. Now, under section 671, again a case study has been given to us. The auditor of X Limited asked for contact details of company's sundry debtors. Now, whenever any detail is asked by the auditor, then all the information, all the explanation needs to be provided to the auditor. Now, here management was under the obligation of providing the contact details to the auditor. Now, let's see what did the management do. For the purpose of external confirmation, however, management refused. Management refused means there is limitation of scope issued by, limitation on scope extended by management. Assuming that there can be chances of financial reporting fraud resulting in material misstatements. So here, because of this, there can be material misstatements. What kind of opinion should be issued by the auditor? See, understand. Now, contact details are not being issued by company's sundry debtors. So there is inability to provide sufficient and appropriate audit evidence, right? Now, it is what? Is it material? Absolutely, yes, it is material. Can it result to fraud? Yes. So is it pervasive? Yes. So in this case, the ideal opinion that should be issued should be disclaimer of opinion. should be disclaimer of opinion. Okay, yes, let's go ahead to the next question. When the auditor disclaims an opinion due to inability to obtain sufficient and appropriate audit evidence, means there is inability, and it is disclaimer of opinion, means material as well as pervasive. So option A says, opinion states that the auditor is not expressing an opinion. Option B, state that because of the significant matters in the basis for opinion paragraph, the auditor has not been able to obtain sufficient appropriate audit evidence. C, amend the paragraph required by SA700, which indicates that the financial statements have been audited. Now, under disclaimer of opinion, the first thing that we need to say is we are unable to express opinion. Okay, so there is no opinion. Okay, then we have to say that sufficient appropriate audit evidence was not possible. And point 3, we could not perform the audit on the financial statements. And all the 3 points, A, B, C, speak about these 3 points respectively. So what should be the ideal answer? The ideal answer here should be all of the above. Okay, yes. Now let's go ahead to the last question for the day. The limitation on the auditor's scope may arise due to. The limitation on the auditor's scope may arise due to circumstances beyond control of an entity, for example, earthquake. Circumstances relating to the nature or timing of auditor's work. Say, for example, this particular entity has a foreign branch, right? It is practical difficulty for auditor to go there and audit. Limitation imposed by management. Management may itself impose limitations as well. Okay, so limitation on auditor's scope may arise due to all of the above circumstances. So I would choose alternative D as the correct answer. So this is a session. This is all that is covered under SA705. Okay, yes, I hope that this particular session would have given you more increased clarity and revision with this particular most important standard, SA705. So if you want to quickly revise, understand and clear your standards on auditing, do not forget to press the follow button and also subscribe the channel, press the bell icon, so when the next time my video hits this platform, you would be the first one to get the video. Thank you so much and keep studying. Bye bye and take care.